Alright, Assalamualaikum warahmatullahi wabarakatuh and very good evening to my lecturer and my fellow friends. Today, we would like to present about financial statement analysis for Bonia company. Before we move more further, I would like to introduce my group mate. We have Nurshada binti Ahmad, Imanina Shamimi binti Sahari Nizam, we have Norafika Lena binti Jasmadi, Sazatul Faziza binti Sabran, and lastly myself, Muhammad Safinazah bin Musa. Alright, we will go to the introduction. We have vision of the Bonia company to be an innovator by manufacturing, producing, and selling different various type of leather with high quality products under the name of Bonia, and attract new customer by introducing exclusive quality of product under the names of Bonia. Next, for the mission of Bonia company, to achieve high demand of leather product as known as the leather products have been commercial in the domestic market and rising the demand in the local fashion and accessories market. For the product, for the product Bonia company, being an expert of leather, Bonia offer wide range of leather goods, including leather handbags. We have footwear and accessories for ladies and gentlemen, as well as other non-leather fashion items such as men apparels. Next, we move to the industry analysis. Financial for Bonia company shows that the earning after tax keep on decreasing starting from 2015 to 2019, which is 2015, they generate profit 50,796 ringgit thousand ringgit Malaysia, but in 2019 they generate only 23,408,000 ringgit Malaysia. This indicates that Bonia bear higher losses of their profit. So we move to the SWOT analysis, will be presented by Sazatul Faziza.
Thank you, Muhammad Safid. The first SWOT is strength. First is strong brand recognition. Bonia has been known by multiple layers of people. It is famous among the middle income men and women who wanted to have a lavish lifestyle. Second is high quality product. Their product is made by high quality materials as they use the real leather instead of artificial leather that may used by other companies to reduce the cost price. Next is their weakness. First is high competition. As we know that Bonia has gained many rivals in the luxury brand industry such as Louis Vuitton, Gucci and Guess and others. Next is high material cost. Compared to the other competitors such as Charles and Keith, Bonia products have a high material cost. This is because Bonia products are made with high quality leather goods. Next we move to Nur Shuhada for the next one.
Moving on to the opportunities, the first one is global expansion. So Bonia has expanded its branches to Malaysia, Singapore, Vietnam, Indonesia, and 12 other countries. Thus, Bonia can expand its brand globally to Western countries as the market size is big at those countries. Next is innovation. It means that the new product with new features or existing product with new features. Bonia can modify their product into better products with existing features. Moving on to the threat. The first one is economic downturn. In recent year, Malaysia's economy has been in a downturn and Malaysia currency exchange rate has fluctuated in the market. Therefore, it will affect the sales of Bonia due to the economic downturn in which the percentage of fashion product has fallen. Moving on to the change of customer preference. With frequent changes in fashion trend, customer will easily change their preference for product or brands. Therefore, it will make Bonia difficult to understand their customer wants and needs. Moving on to the financial analysis by Safiq Nazwan.
Right. In the financial analysis, we have year-to-year analysis. We have cash and bank balance. The changes in 2019 and 18, the cash of balance has increased by 6.12%. This indicates that the company have a good liquidity and also have enough cash to pay their short-term obligation compared to the 2017. Next, we move to the borrowings. From 2015 to 2019, we can see that the Bonia reduced their borrowings or reducing their short-term loans. It is indicates that the Bonia reduce their cost of paying debt to borrower, and then they can use their additional or available money to upgrade their product, or can use their product to pay any short-term obligation. And for the financial performance, we have cash cost of sales. The changes in 2019 and 18, the cost of sales has higher than the changes of previous year, which shows that the cost of for the company to create the products has increased by the years. Next, for index will be present or will be explained by Nur Shuhada.
Index number trend analysis. The first one is trade and other receivable. Trade and other receivable decreased by 48.22% in 5 years period. It indicates that Bonia failed to collect their debt from the debtor, which the Bonia lead to generate their income. Next is borrowing. Borrowing decreased over the 5-year periods. Overall, the borrowing decreased by 48.86%, which indicates companies are slowly reducing their borrowing. Next is cost of sales. From 2016 until 2019, the cost of sales has decreased by years, so this shows that the company has improved their cost management where it has to minimize its cost of sales. Moving on to Sazaito in explaining common size.
Thank you, Nushrahada. The first item in common size is plant, property, and equipment. From 2015 until 2019, property, plant, and equipment has decreased to 22.48%. It shows that Bonia sell their property to reduce their cost. The next item is borrowing. The first borrowing decreased by 6.57%, which indicates that the good for the Bonia is because we can analyze that Bonia reduced their borrowing for the long-term debt and can generate high profit by less paying their debt. Last but not least is their net profit after tax, which is we call it as EBIT. From 2015 until 2018, the net profit after tax has declined, but in 2019, the net profit after tax has increased, which shows that the company in the process of increasing profit earned by the company. Next, we move in the financial ratio that has been explained by Nur Shuhada.
Okay, moving on to the liquidity ratio. Under liquidity ratio, there is the current ratio. So Bonia shows an increasing in the percentage of the current ratio for the first 5 years to the latest, which was 3.06 times in 2019. It shows that Bonia can pay back its short-term obligation within a year. A hint for the investor that the company are able to maximize the usage of current asset on its balance sheet to satisfy their current debt and other payable. It shows that Bonia liquidity ratio is good and Bonia are able to pay back their short-term obligation. Moving on to the activity ratio. The first one is fixed asset turnover. Bonia Fato has been decreasing up to 2018 as their sales is dropping, but they are still considered as able to manage their sales efficiently. However, in 2019, the ratio rise up back, showing that Bonia is efficient in managing its fixed asset and are able to generate sales using it. Next is average collection period. In 2015 to 2017, shows that the company have an average of 60 days per year to collect their credit account or account receivable and turn them into cash. However, it rose, indicating that the company have problem with managing their collective credit account. For Bonia activity ratio, it shows that Bonia are able to manage their fixed asset. However, they still have problem with managing their collective credit account. Moving on to the profitability ratio by Taufik.
Alright, we move to the profitability ratio. We have gross profit margin. Bonia shows that the increasing of GPM from year 2016 until 2018, which is 53.95%, 58.55%, and 60.79% respectively. On 2019, the GPM start to become declining by 54.12%. This is due to the lowest gross profit on that year, which is only 250,178 ringgit Malaysia. We found that next we move to the net profit margin. we found the declining of net profit margin from year 2015 until 2018, but it started to increase in 2019. The lowest NPM is on 2018, which is only 4.33%, and the highest is on 2015, which is 7.31%. The company gained a small amount of profit, the sales and operations, and start to recover back on 2019. We can conclude that in the profitability ratio, he have a good performance, but must we have a good performance of the ratio, but in the increasing in the 2019. Next, I will pass to the Sazatu Faziza.
Next is the market ratio. There are four market ratio listed under this ratio. First is price earning ratio. PER are showing the upward movement in 2017 until 2019. The highest PER compared to the 5-year is stated in 2019, which is at 21.43%, and the lowest in 2017, which is 15.8%. The lowest due to the lower amount of market price. Next is EPS, which is earning per share. It shows the decreasing EPS from 2015 until 2016 and 2017 to 2019, therefore slightly increased in year 2018. Increasing EPS in 2018 due to the profit attributable in the getting risk and effect of treasury share held also decreased from the previous year. As the conclusion in the market ratio, it shows the increasing market ratio in 2019. So therefore, investors should enter the market in 2019. Next ratio is leverage ratio that explained by Musafir.
Alright, for leverage ratio, we have debt ratio. Bonia shows a decreased ratio which makes them less risky than other companies. However, Bonia must not make their debt ratio lower than the current one, which was 25.66%, as will make Bonia less dependent on its leverage. It shows that Bonia manage their asset by debt. In conclusion, we can say that the leverage ratio, Bonia have cut their loss by stop or reducing by making borrowings to others company or maybe banks. Next, I will pass to the Sazatu Faziza.
Next, for the conclusion and recommendation, our own argument on this company, which is Bonia, is first, it is worth to invest in this company for the potential investor. However, it is not worth for the existing investor. Potential investor can enter the market as the performance of Bonia is starting to increase and show the better performance in their management.
Another opinion is Bonia is worth it to invest because the brand itself has their own loyal customer that always waiting for something new from the company. Therefore, it shows that the potential for Bonia to rise itself from year to year. Moving on to the strategy for improvement, the first one is collaboration. Bonia should collaborate with other high-end companies such as Chanel or Kate Spade to improve their collection. These two companies is the most famous company that have captured many eyes either in social media or real life. Bonia could also make collaboration with Malaysian artists such as Zahira McWilson, who have been modeling for Dior company to make Bonia product to be known by others.
Alright, for the change of target market, Bonia should change their target market instead of focusing on the 20 to 49 years old, middle income, either men or female. They could change it to high income women and men. Since this group of people carry so much about their lifestyle and appearance, Bonia is definitely the best choices as it was made for women and men who is working, and it can be easily styled by this group of people. That's all from us. Thank you.